Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 12th, and just wanted to take some time to talk about what we saw in markets last week. Where markets have moved this week, we got some key inflationary data this week, and wanted to spend some time going over those numbers and what that impact had on markets. And then, as we are in a correction period and in a bear market, what do we do with our individual portfolios? So we're going to talk about that as well. So last week was another down week on the S&P 500, just slightly down 20 basis points, but continuing to add to April's losses. You saw a little bit more selling pressure in the mid cap index, which had been outperforming year to date, and that's down 70 basis points last week. And the small index, is measured by the S&P 600, was down 50 basis points, so right in the middle between the two. So as we moved into this week, we saw heavy selling pressure on Monday, following through from Friday's market sell-off as well. And we saw pressure selling again on Tuesday. We tried to rally ahead of the inflationary data on Wednesday, but it didn't really make sense to rally ahead of that, as we want to see what those numbers were. And so headline CPI year over year came in higher than expectations, though less than last month. So last month, or in March's numbers, the number of inflation rate on an annualized basis was 8.5%. Analysts and economists were expecting 8.1% for the month of April. Now CPI came in at 8.3%, so slightly ahead of expectations, but showing that we are drifting downward. And instead of maybe a peak in inflation, maybe we are starting to see a plateau of inflation where we've hit the top and we're going to kind of move sideways here. We're not going to continue the upward trajectory. Now we move into Thursday, and market was up a couple hundred points on the Dow, ahead of the CPI number at 8:30 yesterday morning, and that really turned markets south yesterday, and markets finished the day with some selling pressure, not because of anything other than the fact that it missed expectations and was a little bit hotter than expected. And the Federal Reserve Bank, in their last meeting had taken 75 basis point rate hikes off the table to combat inflation. And so you saw markets saying, well, the Fed's not going to move fast enough. Inflation is going to be with us longer than we anticipated, longer than expected. We're going to go ahead and get out here of the market, and that's what you saw. And now moving forward into today, on Thursday, we got the Producer Price Index, or the PPI, which is how much businesses are paying year over year for goods and services, and their increases year over year. And now in March, the number was 11.5%. Analysts were expecting a number in the tens, and it came in right at 11%. So again, just like the CPI, a little bit higher than expectations, but less than it was the previous month. And you're starting to see maybe a formation of some bottoming or a trading range that we're getting ready to enter in. The NASDAQ really rallied today, down a couple hundred points, and the pre-market is right around the flat line as we're talking right now. And the NASDAQ has been where the most carnage in the selling has been in the NASDAQ. A lot of these growth names that were the leadership mantles for the last 10 plus years have really been taken down. And a lot of these speculative tech names that were trading at price to sales multiples, not price to earnings multiples, have really seen their multiples contract and their stocks sold off 60 to 70% in some of these names that we've seen as they're reporting earnings. So what do you do as an investor when we're in this kind of a bear market like environment? And we've really been in this since November of last year. So a typical bear market condition will last between 6 and 18 months. So if you do the math and we look back to November, we're right at the very beginning precipice of that 6 to 7 months that you could see. Now what happens in bear markets is you have good companies and you have bad companies, and both get taken down. And so when you're looking at your individual portfolio, it may be time to get rid of some of those names that were speculative bets that have not performed up to expectations, and you can get rid of those and upgrade your portfolio to wonderful companies that have phenomenal growth prospects, have great balance sheets, and are able to return capital back to shareholders, but they're now trading at a huge discount, 20-15% off their recent highs. And it's a time for you to upgrade your portfolio and get ready to position yourself for the eventual recovery in the market. So upgrade to quality during these times. And as always, if you have questions about what's going on in your individual portfolio or how to handle it, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much.